We're going to start today's session with a conversation with Hamiz Awan, founder and partner at Plutus21 Capital. Hamiz, welcome to the show.
Thank you for having me.
So Hamiz, let's get acquainted and let's introduce you to our audience. Tell us a bit about your background as well as about Plutus21 Capital. This is the first time we have you here.
Yeah, like I said, we're very thankful for the opportunity to be here and learn from you and maybe give you some insight into our world as well. I grew up was born in Karachi, Pakistan, spent my entire life there and moved to the US to go to school, and I guess I never left. I've been involved in a few different entrepreneurial ventures before, but Plutus was my first entrepreneurial venture in the investment space. Plutus is an alternative asset manager, and we focus very heavily today on blockchain investments. The particular focus for us has been infrastructure within blockchain. So the protocols, the marketplaces, the platforms that make this entire ecosystem run. We try to make sense of those and invest in those.
And where are you operating out of, Hamiz?
Yeah, so we're based in Dallas, Texas.
In Dallas, Texas, okay. And what is the scope of Plutus's investment from a geographical standpoint?
So one of the great things about blockchain is that since the beginning, it's been a pretty global movement and a global network of opportunities and entrepreneurs and people that are building stuff here. So there really isn't a center of blockchain like maybe you might have for, SaaS companies or fintech companies. It's always been a very global thing. And so our investments have no real borders. Some of them don't even have headquarters, right? They're just such a unique, way of organizing people around a problem that some of them don't have companies or CEOs at all. And so we look for problems that need immediate solving. And a lot of times those problems are outside the US. A lot of the financial infrastructure issues and governance issues are outside the US. And so naturally the user base that we look at is usually outside the US, but the companies really are global in nature.
And what structurally, what is the structure of Plutus? Is that structured as a regular venture fund, or is there some innovation that you're doing with the fund structure as well?
Yeah, so we're innovating in that structure as well. We're actually an open-ended fund, and that's possible because we're in blockchain markets, and we invest in very liquid assets. And so one of the interesting things about blockchain-based assets and blockchain-based ventures is that a lot of the assets in this space are liquid, and they're not the traditional private equity that you would buy in these early stage companies. And so because we have liquidity on our end, we can actually do venture-like investing, like early stage investing, but do it with liquidity. And so that's why we're able to have an open-ended structure for most of our vehicles. We do invest from time to time in traditional private equity, these companies, and those are then structured mostly as separate special purpose vehicles that are closed-ended. But for most of our investments, we have an open-ended structure, and it kind of looks like a marriage between a hedge fund and a venture fund. You have the liquidity of a hedge fund, but you're investing as a venture investor would.
All right. So let's do some case studies. Maybe that would be the best way for us to understand how you invest, how you structure, and so forth. So pick, one or two of your investments and walk us through what they do, and how you have invested in those companies. What is the structure? What is the denomination? And so forth. And I will ask you more questions as I learn more from you.
Sure, absolutely. So one of the things that people, I think, misunderstand about blockchains is that the only disruption happening in blockchains is how they're going to disrupt business models. So they're going to come in and give, maybe Bank of America a run for their money. That's just one part of the disruption. In my view, there's two separate pieces of the disruption here. One is the disruption in the business model. The second is the disruption in how capital is being formed. So a lot of these companies are actually not going down the traditional path of fundraising. They're not going and raising capital from VCs or angel investors, but they're actually doing, they're either pre-selling their service and raising capital that way, or they're raising money through essentially like loyalty programs. So some of them look like a loyalty program, some of them might look like an equity, some of them look like commodities that can be used in the ecosystem, and they're financing their businesses like that. And so it is a little bit more difficult to understand why these different assets would have value, these digital assets would have value, but essentially there's a new part of the capital stack. You traditionally had debt and equity. Now you have debt, equity, and then digital assets. It's like a whole new piece of how these companies are raising capital. And so we have to then think about it from that perspective, like apply a lot of the things that we've learned from traditional investing, but then understand that we're in a new, world of investing. And so one example, which I'm sure a lot of people will be aware of in this call, is the Ethereum network. So the Ethereum network is essentially a plug-and-play blockchain solution. So if you would like to build a blockchain startup, you don't have to go and necessarily build a blockchain yourself. You can just plug into the Ethereum network that already has that infrastructure, the security, the incentives already figured out, and you are just using it as if you would have used the internet to build Facebook, right? Like Facebook didn't create the internet, they just kind of plugged in on top of it. So it's similar to that. Ethereum is sort of a plug-and-play blockchain solution and one of the biggest out there. Now, in order for anybody to use the Ethereum network, they have to pay a certain fee to the network to process their transactions. That fee has to be paid in its native digital asset, which is Ether, ETH, which is also the second largest digital asset in the world. And so one of the ways that you could invest in the growth of the Ethereum network as more people use it as a plug-and-play solution, one of the ways to invest in that growth would be to actually buy Ether. And if you buy Ether, you're essentially buying the fuel that all of the cars in the future will need. And you're holding on to this limited amount of fuel today. And that's what gives it value, because if these cars become popular and everybody in the world wants to use these cars, they're going to need the fuel to run them. And so you're essentially owning the fuel, and that's how you express your opinion on the growth of the Ethereum network.
So in terms of your investment, are you investing in only Ethereum-based businesses?
No. So Ethereum, we invest across the board, but like I said, we focus on infrastructure. So instead of picking individual applications of the technology, right? Like instead of thinking, okay, blockchains are going to be used for money transfers, or blockchain is a currency or supply chain solution. Instead of picking individual applications, what we like to do is we like to pick the platforms that all the applications are being built on. And that way you're essentially, if you think about it from this way, you're sort of investing in the app store instead of the applications themselves. And when you invest in the app store, you kind of get really broad exposure to all of the applications out there. And you might have thousands and thousands of applications that people build, and most of them won't work. But as long as they're using the platform, the app store, to do their transactions, like you have exposure to the growth of those applications. So it's sort of like a layer one investment strategy instead of the layers that get built on top of it. So we like to invest in those layer one and like infrastructure plays, because it gives us really broad exposure without us having to pick the winners in the individual applications.
Great. So now take us into examples of infrastructure layer investments that you have made, one or two, and talk us through what they do and what is the model.
Yeah, so we really like investing in one of the infrastructure plays that's really necessary is a marketplace. So there should be a marketplace for people to buy and sell these digital assets. And that's infrastructure, right? Like it allows for this ecosystem to run. And so we really like that business model because one of the great things about marketplaces is that they make money in both good markets and bad markets, right? Because they take a small fee off of every transaction. And so as long as there's an active market, and one thing we can all get any room to agree on is that the blockchain markets are active, right? Like they're volatile. Everybody knows that. And there's business models out there, particularly the infrastructure ones, that benefit from the volatility, right? So the more volatility there is, the more transactions they process. And so one example of a company that it's really not a company, it's called Uniswap. And this is a protocol without necessarily a CEO or a company. And what they figured out was why do we need this entire the New York Stock Exchange and its infrastructure behind it when all the New York Stock Exchange and their brokers are doing is matching a group of buyers with a group of sellers, right? Like that's all that really is happening there, right? So why do we?
Not like a marketplace. New York Stock Exchange is a marketplace, yes.
Yeah, it's just a marketplace, right? Like why do we need all of those people and all of those brokers and market makers to be involved? Why can't we just teach that to a computer? Why can't we just say, hey, computer program, when there's a buyer, find a seller and match the two and get it done? Why do we need to have these entire organizations and businesses that take a cut off of all of those fees? And so what they did was they taught that concept to a computer program that was built on Ethereum. It's called Uniswap. And Uniswap today is trading $1 billion or more assets without any people involved or any companies involved at all. You're able to essentially go peer to peer. So if you want to sell an asset and I want to buy it, we can just do that directly. There isn't a need for a broker and a clearinghouse and a bank to be involved in that. It's just you and me going directly with each other. So we like those type of plays where they're essentially disintermediating entire businesses by teaching that business to a piece of software. And the software is infinitely scalable, right? So the cost of running that software for an entire year might be the cost of a few employees at JP Morgan or something, right? Like it's just so much more efficient and cheaper to run it that we believe over time, programs like Uniswap are really going to give traditional businesses a run for their money. And that's why we want to invest in them.
And how do you, so now explain the structure in one of these cases when you are investing as Plutus21, what is the structure of that investment?
Yeah, so in Uniswap's example, there's a token called Uni, which is the governance token for the protocol. And so how does a company that doesn't have a CEO make decisions? Well, it's actually the community that makes the decision and they vote on that decision using their token. So their token gives them a voting right essentially on the protocol. And that is the asset that we invest in. Now, investing in that asset gives us voting rights today, but we believe in the future that will give us a piece of their cash flows as well, or some connection to their cash flow somehow. But today it really is a governance token, so it gives us a voting right in the system. And some of them are structured like that. Some of them look like governance tokens, and then some of them, like I said, look like commodities or maybe look like pre-sale of a service. But that's how you.
What kind of denominations are we talking to buy into this exchange with a governance token? How much money are you putting in?
So we would take our investments are based off of the adoption numbers. So the more there's adoption, the bigger the positions become. If there's an established name like Ethereum or Bitcoin with millions of users, that can be a very significant position for us, 10% or more of the fund. And so that could be $10 million or more. But then we also want to learn about smaller protocols that are doing something innovative. So we might only put 0.25% of the fund That might be $25,000 or $50,000, so that we can watch the development of that protocol closely, and keep up with them. So check sizes, I guess, range from, we're not a traditional VC, so I don't really like to call them check sizes, but we range from like $25,000 on the low end all the way up to, I think the biggest position we have might be more than $15 million.
And how big is the fund?
The fund is about 100 million. We have a few different funds. If you put them together, they're about 100 million.
Asset under management is 100 million. And so let's say you have this kind of governance right in a particular community. What is the progression of your investment? How does that play out? And maybe it hasn't played out fully yet for you, but you have a theory on how this is going to play out and how you achieve liquidity and returns on investments. So explain that model a bit more.
Yeah, so the model really has been flipped on its head, right? Because the asset is liquid every day, and I have a price for it every day, and I have liquidity for it every day. So I could sell my entire position today, and I could buy it back tomorrow, right? So it's really like very different than venture investing. But our usual time frame is about 3 to 5 years, because that's how long we believe it takes to get from about 10,000 users, which is where we take a significant position, all the way to a million users or more. And it will be at that million user mark where we will start to think about, okay, this has ran the cycle of our investment thesis, and that's when we would start to take, money off the table. We found that it's much easier to figure out who's going to get a million users when they already have 10,000 instead of when they have 0 users. So we're not the seed early stage investors. Like, we usually try to watch them closely up to that $10,000 mark, the 10,000 user mark, and then at 10,000 users, we have a lot of conviction, and we take positions in size. So adoption really is the number one factor for us as we invest, because one of the things to understand about the blockchain space, and obviously, like anything I talk about is not really investment advice. Like, I'm not an expert on any of these things. I'm just trying to learn as much as I can. But one of the things to understand is that all of the software in the blockchain space, most of the software in the blockchain space is open source. So you can see it and I can see it and you can copy it and you can create your own version of the same thing. So the way that you protect your business is not by having the best software. The way you protect your business is by having the most network effects. So the most durable competitive advantage in an open source environment are network effects. Because even in Uber's example, Uber's application can be replicated, but Uber's users and drivers are very difficult to replicate. That's what gives Uber value. So the same thing is true here, where the software is actually open source and anybody can copy it. So the only reason that one network survives and the other one fails is that they had the users and the adoption numbers that even though their network could be copied, the software could be copied, you couldn't copy their user base. And that's what gave them value over time. That's why adoption is so important to us, is because we feel that's really the only durable competitive advantage.
So I want to probe that point a little bit. We have done a lot with two-sided marketplaces in our community. We see two-sided marketplaces all the time. We have lots of case studies. We have courses, curriculum material on it. And we see a lot of entrepreneurs trying to build two-sided marketplaces. As you rightly said, it's much more difficult to go from 0 to 10,000 than to go from 10,000 to a million when the network effect starts to kick in gear in two-sided marketplaces. And that's not just true in blockchain, that's true in two-sided marketplaces in general.
Yep.
So what have you learned to go from 0 to 10,000? What are people doing that you have seen is working?
Yeah, and this might sound like sort of like soft advice, not something that is like really actionable. But what I've seen consistently with the ones that have achieved that is that they're extremely community focused. So one of the reasons that blockchain networks have grown so much without really like Like Bitcoin doesn't have a CEO, it doesn't have a marketing budget, right? Like why has it
Right.
become $1 trillion asset? It's because of the community. There's like this community of people and like this volunteer like firefighting force or whatever you want to call it that's like always out there and like believes in the stuff like so dearly that
Energy within the community that drives its momentum.
yeah, exactly. And so from day one, the companies that we've seen really be successful are the ones that are community focused. The CEOs aren't just talking to investors all the time. The CEOs have a weekly Ask Me Anything. These are CEOs of multi-billion dollar companies. And on every Friday, you can jump on their Twitter and ask them anything you like. Whether you're a $10 user or $1 million user, it doesn't matter, right? And they have this like communities that are being built on Discord and Twitter and like non-traditional platforms like that, where I think a lot of early stage CEOs are so focused on the product and so focused on the fundraising that the only interaction they have with the customers is through like periodic surveys, but they don't build like this rapport with their customers, right? Like they don't build a rapport with their suppliers and don't talk to them on a daily basis. Like if you look at a CEO schedule, right, the traditional startup CEO schedule, customers are not on it on a regular basis, right? It's usually the team.
This is the point that we are driving home all the time, is that customer matters a lot more than investors. Do not chase investors, chase customers instead. It's a better use of your time.
Yeah. People will even spend time like doing competitor research in their daily tasks, but they will not spend time speaking to at least one customer every day or a bunch of customers every day. And we've seen this in Amazon's example as well, right? Like whether it's true or not, like Jeff Bezos has always said, I'm customer focused, right? Like I don't care about the short-term returns for investors. I'm customer focused. I'm obsessive about that. And so the ones that I've seen be the most successful are the ones who spend more time with customers than they do with any other stakeholder. And those are the ones that are really solving problems and really have the empathy that you need to build great software. Great software comes from a place of empathy. That's the first place that great software comes from. And so the people that have built time in their day to improve their empathy for the user are the ones that are successful.
Hamiz, could you talk about what kind, you're investing in that layer one, the infrastructure layer. What's happening above that layer? What kinds of applications, what kinds of communities, what kinds of marketplaces are being built on top of your infrastructure layer companies?
Yeah, it's like such an incredible pace of innovation that if you spend a few years on it, like the way that I have, you're still going to feel like you're a beginner because there's just so much going on. I'm sure you've heard of NFTs by now. I'm sure you've heard of DeFi, decentralized finance. Like those are just like two of the hundreds of things that are happening in this space. But those have caught people's attention, right? And one of the important things about NFTs is that two things. So one is today NFTs are focused on collectibles and art pieces and things like that. But an NFT is just like it's like a platform. So it's sort of like the internet, and entrepreneurs from around the world are going to build all kinds of applications on top of it that we can't even imagine today. So that's one thing. And it's a theme that's here to stay. The second thing
Have you invested in an NFT platform?
Yeah, so we do have investments in NFT platforms that we're not disclosing right now because we're just building them out. But we are actively looking at that theme, and we have been for the last 3 years. We didn't even call it NFTs 3 years ago, but we liked that theme where there was digital scarcity in collectibles. The other thing about NFTs is that most NFTs are going to be worthless. There's a lot of hype and mania in this space, and somebody is going to be left holding the bag, right? And there's going to be a lot of that happening. But what's important is that as celebrities and people that have influence get involved in the space, like Mike Tyson sold an NFT for I think $300,000 the other day. for a weekend with him, right? Like he sold an NFT. What's important with that is all these people that are, that are connected to those influencers are going to come into the blockchain space because Mike Tyson is doing an NFT, right? And most of them are going to test it out, experiment with it, and most of them are going to leave. But some of them are going to stay for the technology. They kind of came in for the hype, but they're going to stay for the technology. And so the way that you go mainstream is you have these like, media grabbing headlines, and those bring a lot of people in this space, and most of them leave, but some of them stay. And that's how you get to mainstream adoption, because the fans of, Taylor Swift or The Rock that have never thought about blockchain beyond a currency are now going to see it in a different light. And some of them are going to love the experience and they're going to stay in the ecosystem forever. So that's how you're going to slowly go mainstream. You need these NFT manias and, DeFi manias to happen to bring the masses into the blockchain sphere.
So, Hamiz, I want to comment on that. Actually, I want to use a different example that I've been kind of following in the NFT hype cycle, let's call it, is the example of Damien Hirst. Have you seen that Damien Hirst said that he was going to, for those of you who are not familiar with Damien Hirst, he's a very famous British artist, sculptor, and painter and so forth. So he jumped on the NFT bandwagon, and he has said, I think he's going to create some large number of artworks that are connected to NFTs. So these are not digital artworks, I think, to begin with. I think they're physical artworks that have an NFT tie-in. Have you seen this? But that requires a different infrastructure. Have you seen this infrastructure developing? This actually makes a lot of sense to me.
Yeah. That's what I said, right? Like NFTs are just like a concept, a platform for people to innovate. Some people are going to say, oh, we're going to have a physical item represented with an NFT. Some people are going to say it's going to be pure NFT. Some celebrities, like I was mentioning with Mike Tyson, are seeing them as experiences. So what he sold for $300,000 was a weekend with him, and he would train you. Like that's basically what he sold, right? That's not art, right? But that's like just an experience. And so if tomorrow, like Taylor Swift comes out and says, I'm going to launch an NFT, and if you have my NFT, you get front row seats in all of my concerts, and you can come backstage with me. Like, what do you think that's worth? That's worth a lot of money to a lot of people, right? So, and then once...
but just a second, these are two different case studies use cases that you described. The one with Mike Tyson is one weekend with Mike Tyson. That's, you don't need an NFT to sell that. Because you cannot resell that. That's one weekend with Mike Tyson. You are not getting multiple weekends with Mike Tyson. Taylor Swift, that could be a NFT, because that's a privilege, that is a recurring privilege, and there's value in buying that and exchanging that and auctioning that even.
Yep.
So
yeah, and like Taylor Swift's thing could be even simpler than that. She could just say, hey, whatever songs I launch, people with my NFT get it 5 days before anybody else does. Right? Like it could be something as simple as that. But what's happening with the Mike Tyson NFT is that the NFT that they actually sold, will now be a memorabilia forever. That was my weekend with Mike Tyson, and I have this to prove it. Like I own that experience, right? So there's going to be all kinds of innovation. Some of it is going to stick. Most of it is not going to stick, right? But again, like I'm not an expert on NFTs. I just like to invest in the platforms that help people create and sell NFTs, because whether they like the experience or not, right? Like the platforms are benefiting from that interest.
Right. So I mean, on that topic, I would say that if I put on your hat, I would look for a platform that actually applies the NFT principle and facilitates doing these hybrid NFTs, the physical, virtual combined NFTs for the art world, because the art world actually has a real problem, right? Fraud is rampant. So I think the art world should anchor itself in the blockchain infrastructure of the world with NFTs and everything, so that the fraud can be zero. The art world, if they apply the blockchain principles, can get to a zero fraud solution. given where we are today, given the fact that the infrastructure exists, the base layer infrastructure exists. But I think you need another couple of layers on top of that base layer to make that possible. So if I were you, I would look for that solution, because that solution is going to be big.
Sure, absolutely. You see, like now your ideas are churning in your head, and we can all imagine a use case for that. And there's a lot of hype here, right? But there are going to be a few use cases that stick, right? And we just need a few of them to stick. We don't need every single idea to work for this to be really transformative for the entire world, really. And one of the you talk about like rights of artists. One of the really great things about this is you can enforce those rights within the NFTs. You can say every time you play this song, the artist gets paid a certain amount. And then if this art piece gets sold again, the artist gets a cut of the new sale price. You can enforce all of that using an NFT, which is not possible today, right? So there's just so
well, and it's full of intermediaries. Just like you gave the example of New York Stock Exchange, it's full of intermediaries, full of bloat. The art world is full of bloat, and if you have the infrastructure to be able to remove a lot of that intermediary or make those intermediaries more productive somehow. Right now, it's very difficult for artists to reach collectors. I actually have an article that Maureen can share in the public chat, and you can take a look at it, that I published on my idea of how that world should play out, anchored on blockchain. So anyway.
So that's what keeps us excited about this space, is that there's so much great innovation happening that a few of them is going to be totally transformational. Most of it is not going to work. That's just the truth, right? But just a few of them need to work for this to transform how we do things and how we do business.
Very cool. This is a fascinating conversation, Hamiz. Thank you for this.